Hi everyone, this is FX Goat, your mentor. I'd like to welcome you to another strategy, which is namely the Nasdaq M&Z strategy. So without any further waste of time, let's jump in. So as you know, firstly, before you can actually start trading, you need to know the basic rules of how to trade a certain strategy. So now let's start firstly with the Z pattern. So the Z pattern, you wait for Nasdaq to pick a direction and then reverse, forming a V shape and complete the Z pattern. So what do we mean by that? So if you can look closely over here, the market pushed to the upside and then they exhausted, right? And then here we had the previous low. So now it impulsed again to the upside, exhausting to form a V shape. As you can see, it's an inverse V shape. So here at the bottom, you can definitely see confirming a double bottom. As you can look at the overall market, we confirm that it's the pattern of a double bottom, of which it formed an even triangle. So from a triangle, respecting the support zone at the lower zone, we're anticipating for what? For a completion of a Z pattern. Let me repeat that again. So what I mean is the market pushed to the upside. You wait for it to exhaust. After exhausting, you mark this as your previous low. And then the market continued to go up and exhausted again to complete what we call a triangle. In the overall, it's called what? An inverse V shape. In a V shape, after completing the V shape as said in the rules of the strategy, we wait for the market to retest the previous low for us to actually enter a buy opportunity to complete what? A Z pattern. So what is needed here? You need to be patient and respect the highs and lows. What do we mean by that? As you can see, we had our highs here and then we had our lows here. As you can see, the market respected this lower zone 3 times. It went up, exhausted. Now it is forming another low and then it's forming another high. The market pushed up again, confirming the other high and came back to retest the previous low, as you can see over here. So this is acting as our what now? Our lower zone, of which we're anticipating when the market reaches this point is going to actually go impulse to the upside, completing what? Our Z pattern. So Nasdaq has a tendency of picking a direction and reversing to respect the previous low. So what did the market do at this point? Nasdaq came here and went to the upside, picking a direction to the upside, as you can see. Now, after picking a direction, we are anticipating that the market will continuously go to the upside in respect with what? The direction that the Nasdaq chose. So if you can look closely, the market impulsed to the upside, exhausted, and then now we're looking for buying opportunities. Remember, after every push, there's always an exhaustion. So the market exhausted and then there was a push again. And then the rule says this: Nasdaq has a tendency of picking a direction and reversing to respect the previous low or high. In this instance, the market pushed to the upside, came back to respect what? The previous low. And then it completed our V shape to impulse to the upside, completing our Z pattern. I hope that makes sense. So these are just the basic rules. So let's jump to another slide. That pattern continues in this instance. So the entry rule is you have to firstly wait for Nasdaq to pick a direction as said in the previous slide, and then show a rejection candle before placing an entry. It's important to know how to read candlesticks when it comes to trading Nasdaq, because that's very crucial and important. That's going to make you to be able to see turning points. That's going to be able to make you see reversal candlesticks, etc. So in this instance now, let's use this example. Nasdaq, as we're waiting for it to pick a direction, the direction was it retested the previous low, which is the support zone, and then it pushed up again. And then now we know the overall direction is the upside, but we actually have to start looking for what? Buying opportunities. What do we do at this instant? We be patient. As said in the previous slide, you have to be patient. So the market impulsed downside, the previous low went up, exhausted in completion of a V shape. As you can see, it's mentioned, forming what? A triangle. Now our entry rule, you buy at the retracement of previous low for you to place your buy entry. As you can see over here, the market actually showed us 2 candlesticks, of which is a rejection candle, showing us that there are buyers that are coming into the market. Hence what? The Z pattern was completed. That means there was a hard push to the upside in confirmation of the direction that has been chosen. So we had our previous high over here, as you can see, in formation of a what? Of an M formation. So after retracing at the previous high, the market showed a rejection candlestick. If you can look closely, this is a rejection candlestick, and then it completed our Z formation going the downside. As you can see, this was a complete V and then we waited for it to confirm the double top, and then after the double top we're expecting what? A reversal to the downside. This strategy is basically the high and low strategy. Let's look at the example closely. So the entry rules when it comes to this strategy. Know that the highs and lows are respected by price when it comes to Nasdaq. That is the crucial thing you need to remember, guys. It's important to always spot the highs and lows of the market for you to be able to see where to enter and where to not enter. Always mark your highs and lows, place your sell order, and write down with it. So as you can see, we had a hard push to the upside. Now this is what is our previous high. The market exhausted in completion of what of our V shape, as you can look closely. So this was the high. Now the market came up to respect the previous high, confirming to us that this is a what? Is a resistance zone, because the market cannot completely turn against this point. So this point is what? Is a resistance zone. And then we place our sell limit after the exhaustion. We place the sell limit that when the market triggers it, it goes down with us. Let me repeat that again. So as we said, mark all the highs and lows. This was our previous low. Now this has become our high. The market came down to retrace and in completion of a what? Of a V shape. After completion of a V shape, now the market came to the upside to respect our previous high, which it confirms to us to be what? Resistant zone. You place your sell limit, and then we went down with the market. And then now the market crossed our previous low with a shorter retracement to complete. That is going to be overall going to the downside. So that is why it's important that you place your orders. It is crucial for when trading Nasdaq to know that orders are really important. Market execution sometimes can really work against you, sometimes it can really work for you. But in most instances, we normally use orders like sell stop, buy stop, sell limit, sell stop. So that's the basic crucial things to know. If we can go to continuation of our strategy, you would understand that the entry rule when it comes to the retracement here is really crucial. So the market had a hard push to the downside from this point to here. Now it turned here. Now the highest thing to always look for is always understand why Nasdaq has previously turned at that point. Mark that point as what? As a reversal of the future retracement. So the market came to the downside. Now this was our low. The market pushed to the upside, as you can see. So now this acted as our low. Now we're anticipating it can act as our low again here. And then the market decided to do what? It went down. When it reached this low, we placed our buy limit over here, anticipating that the market after triggering it gonna go up. And then now we know we like for me part of the 2%. When people's orders are being triggered at this point, the market went down to take some people out before actually going with the 2% to the upside. So you have to wait for the price to retrace on the previous low. That is when we're looking for buying opportunities. Place your buy order and ride with it. So our buy order in this instance, we normally use buy limits, but it's also crucial to also use buy stop, because the market can decide to go up and trigger you in profits. So the market pushed to the upside. This was our previous low. It exhausted, and then now it reached this point. It went down again. And then we could have anticipated that the market would actually retrace at this point. That is why we put in a buy limit. It decided to go down, put us in the pending loss before shooting up to our anticipated direction. So that is the entry rule when it comes to buys, looking for buying opportunities on a highs and lows strategy continuation. So let's close and move to the next slide. We were in a buying opportunity over here. The market chose a direction of going up, and now it exhausted. This acting as our low. It went up to come back and retrace or exhaust to our support zone in this manner. So this low was respected previously. Now it is respected currently. We entered our buy limit or our buy stop over here. The market triggers us and we are in profits. Right? The market decides to exhaust at this point. Now this is acting as our previous low. That is what? Our previous high. So the market goes up to respect our previous high at this point, to go down even further. But if you can look quite closely, it was respecting what? Our previous low. Though it didn't respect it quite much, but it respected it. It came here and then went up again. So our buying opportunities are here after the previous low. Our selling opportunities are here after the previous high. So you have to understand, this can act far most as a W formation. This can act far most as an M formation. Hence is what the strategy is, the MZ formation. So this is the inverse M. Now this is an actual M formation. I hope that makes sense, guys. That's it for me. FX Goat, your mentor. I'm signing out.